Hey everybody, Chris Cullen here, and today I'm going to tell you how to make money as a buyer when interest rates are high. Right now there are a lot of buyers that are in the market space, and a common theme is we want to wait for the rates to drop. So I just want to kind of cover that and explain how you can actually make a lot of money buying right now instead of waiting for rates to drop. So, essentially when somebody comes to us and they want to buy a home, homes are always purchased on what people can afford every single month. Now, sometimes people don't have monthly budgets, they're called cash buyers. For a majority of people, they're buying their home based on their income, what they can afford, and kind of what they have down. Then they take that and they go to their lender and they say, Mr. Mrs. Lender, I make this much money a month, here's what I could do. And the lender says, okay, you have $1,500 a month. So I'm going to explain how interest rates will artificially inflate the values of properties and how you can make money today buying while interest rates are considered a little bit higher, even though they're not crazy high. And kind of a fun fact, between 1970 all the way to about 1997, interest rates were never below 7%, I believe, something like that. So, but back on topic. So when you think about buying a home based on the interest rate, so let's just say that today you can buy a home for 7.5%, right? 7.5% interest rate. I think they're lower than that, but to get some numbers down, I said 7.5%. The price is $225,000. Your monthly payment, just principal and interest, is probably going to be around $1,500. So now let's back up. Now let's say rates drop down to 5.5%. What happens is, and this is how the values get inflated. It's the same buyers, same house, everything's the same except for rates drop, and that is when people start saying, well, you know what, instead of $225, I'm going to offer them $235, $45, $55, because my payment is still below my $1,500 because now the rates have dropped. So when you think about rates dropping down to 5.5, you're going to be at $275,000 for $1,500. So how do you make money as a buyer when rates are high? You buy the home at a reduced price, right? Or at today's market value, you buy the home. As rates drop, people can afford more and they start bidding up the homes. And that is how home values go up. So the way you make the money is you buy it today and then you refinance it at a lower rate. So now you buy the home for $225,000 today at, let's just say, 7.5%. In a year from now, when rates drop down, let's just say they're at 5.5%. Now you refinance, your payment went from $1,500 down to $1,200. And now you're locked in. You marry the house, not the rate. And then lastly, by that same premise of like, how much can I afford? If the rates drop down 2 points and people buy based on what they can afford, your new value is $275,000. So in theory, you'd make $50,000 by buying it now and then refinancing. So anyways, that's why right now is a really good opportunity for buyers in the market space. We're in the middle of the spring market. The market has kind of been up and down this year. We're still in a strong market, but what's going to happen as the tariff things start to settle down, rates begin to drop, the buyers are going to be coming out, and it's going to get pretty wild. So if you are on the fence, or if you've thought about buying a home and you want to talk through what that process looks like, and give us a call, reach out to us. We would love to help you. Chris Cullen, Coldwell Banker, Breezy Point. And if you have any questions, let us know. Thanks.